Before we delve into this, can I ask you about the carbon ETF that we've been following? I mean, this was an amazing performer last year. You might think that the carbon price would be higher than ever right now, but the opposite is going on. What's going on there? Can you explain that?
Absolutely. Thank you very much again, Kelly, for having us on. The carbon market's been fascinating. I think we saw a bit of a technical sell-off on sort of day two of the invasion that really roiled the markets. And I think the markets haven't quite come back, although they obviously recognize the technical nature of the sell-off, and we've seen that rebound. But it is reasonable. We've been doing a lot of work on this. Should we be a little higher than where we were or a little lower where we were in a pre-sell-off? And I think we're in a reasonable spot. I think we should see this possibly getting back to the sort of 90 EUAs, European carbon, getting back to the 80 sort of mark, 80 euro mark. But what's happening is that we've got these dueling movements. We've got the fact that we've got less natural gas flowing from Russia, which means more coal, more oil being burnt, which creates more emissions, which is why, as you rightly said, you could assume maybe we see higher carbon prices. But at the same time, higher energy could usher in potentially recessionary pressure that might actually reduce emissions in the net. So I think the net of this is slightly positive for carbon, but there's a lot of uncertainty. So
it's really interesting. It's almost like its own little yield curve where it's trying to predict future demand, and the bearishness there is offsetting the bullishness now. But yeah, I wonder also beneath the surface, we've seen policymakers in Europe specifically take capacity out of the market in order to drive up prices in recent years. Have they changed course at all? Because right now, obviously, if you want more coal and other things to kind of keep the lights on, it might help if people didn't have to pay up for emitting carbon.
Yeah, and so they haven't changed at all. In fact, what actually helped the market regain its confidence in the last couple of weeks is the fact that the Market Stability Reserve, which is buying supply, as you mentioned, the Fit for 55 program, which is the overall tightening of the market, which is increasing the decline in supply over time, all of those being reaffirmed. We're also seeing that in the California market, these programs being reaffirmed. And I think it's really important to notice that the price of energy isn't higher because of the price of carbon. And in fact, it has very little impact at this stage. So reducing or taking, no pun intended, the foot off the gas on tightening the carbon market won't really change outcomes for energy prices, and will just put a hole in the efforts to, over the long term, fight climate change. So what I think is key to note is that energy security and just national security has become a much bigger priority in Europe. But it doesn't mean that just because climate and carbon prices have moved to priority 2, that they're not still, a very strong priority. And we've seen those markets. The European Commission speak very clearly that they are not.
Is that, and everything you say is so important, and there's so many contradictory signals going on, because you have policymakers on the one hand upset that the industry isn't producing more. On the other hand, they're not, they're still charging a price for emitting carbon, basically, and they're not lowering that right now. Is it basically that it's so lucrative because of where prices are that producers can just absorb the carbon price and it's not that big a deal to them? Because I have to imagine it's a disincentive. That's the whole point of it existing.
It should be a disincentive. And going into this, now, we couldn't predict what happened in the Ukraine, but it's very clearly the point is to disrupt, is to increase costs on companies that continue to pollute and to not shift away to greener or more efficient ways of producing energy. So that hasn't changed. And although while we're in the thick of it, the urgency of what's happening between Russia, Ukraine, and Europe can't be dismissed. We must not get away from the objective of reducing emissions. We must decarbonize. So I think that stands. Europe still stands right behind it. We're seeing the market recovering. And I think, just as you say, there's the way we model it is we look at the declining supply over time, and then we adjust that demand curve. There's other things that could play in. Does Germany ration natural gas and maybe shut down certain industries for the short term, which might put a bit of weakness into the market? We're seeing all of this being priced in. So I think it's great to see how efficient the carbon markets are and that they are pricing in all of these factors.
It's fascinating.